Good afternoon, traders. This is Christian Farmer. It's Tribeca Trade Group, and this is your end of week. You could call it the end of the month. You could call it the end of the quarter video for the 31st. So congratulations, making it through the first quarter of the year. Lots of twists and turns in this market throughout the year. I think something for everybody. Overall, just as we kind of concluded with the year 2022, which I think was a great year for traders to learn and gain some perspective from what they saw, an experience which, last year was obviously was much different than what you experienced in other years. And I think so far this year too, it's also a lot different, right? Very difficult, if you think of what has transpired this year, right? We've had more rate hikes. We've had, then of course, we've had this banking situation. Very difficult to try to predict some of these things, right? I've been doing this for a long time. I've been trading since, I started my trading career just, right before the year 2000. And, there's always these types of, some of which I guess you could think are expected, some unexpected. The housing crisis, when that occurred, people were trying to predict the thing that people forget about the financial crisis in 2007, 2008, is that people tried to predict that for probably 3 years before it actually happened. So, it's one of those things where to me, it's better to kind of, go along with what the market is telling you, follow some signals, follow the price action, right, and make adjustments as you go along the way. I had somebody, I always, get valuable information from Twitter, and I mentioned it in these videos. Sometimes people think I'm complaining about Twitter, but no, I actually think it's a really valuable resource. Number one, there's a lot of good follows who share, their ideas and some of their trade setups. And number two, you can really get a gauge of sentiment from traders. Remember, all of these people are in the marketplace, right? All of these different people who have macro viewpoints, micro viewpoints. Right. Somebody was asking me, and I'm not picking on them, but they're like, well, what do you think the shorts are doing? Do you think that there's, I mean, if you're trying to play that game of what you think the shorts are doing, what you think the longs are doing, what you think the long and shorts are doing, what are the hedge funds doing, right? You're going to wrap yourself like are basically around a tree trying to figure out all these different parts. And I've seen it happen on Twitter over and over. Well, what do you think about what do you think this party is doing? And then if they're going to go short here, just follow the price action, right? People, the best thing that what I try to teach at Tribeca Trade Group is something that I've learned over the years, which is basically just following the trends. And I know like this year we've talked about this a lot this year, and a lot of my videos, I've talked about how we really have sideways price action, right? So it's been a tough year for trend trading in equities. Of course, there have been some areas that have trended. There's some areas that have trended for a couple of weeks, some areas that have trended for a little bit longer than that, but it's really a strategy of, and a discipline of where you kind of have to be, just that you have to be disciplined, right? Obviously right now, you look at today's leaderboard, and it was pretty awesome price action for things like software and growth stocks right today. Very, very strong, but that's not going to be forever. That's right now what's doing very strong. Growth stocks were up 1.8%, but clean energy stocks were up 3.5%. Software was up 2.5%, made all those gains in the session today, right? Up 2.4%, right? But that'll last for a little while, and then it will be something else, right? Just like we saw for a while, every industrial company was very strong for, about a month as well, right? So all kinds of small cap industrial. So the more that you can concentrate on what is moving, right, and being on the right side of the market, and the risk behind that, right, and knowing when to take bigger risk and to lighten up on risk, right, that is so much better. That is so much more important than trying to figure out if there's short covering going on or if it's a bear market rally. Who cares about any of that? That's a waste of time and energy. So, that's so if that speaks to you, and you're looking for a community to trade, and if you're looking for somebody to kind of teach you some of these things, and I'm fully transparent. I give all my, I tell traders exactly what I'm doing, every day. I give trade ideas where I think that they are more compelling than others. If there's option activity, I never go back and say, oh geez, did you see those calls and how I mentioned them 2 weeks ago? I don't think that's really value add. So I take the trades. I report my P&L at the end of every month. This month I'm excited. I had a very good month. That doesn't mean I'm going to have a good April. That still means I need to follow along and follow the process. But so far I'm up 15% year to date. I finished up February up 5%. I gave back 2% in February, and I had a nice, I was up about 10% this month. So very, very strong. And I look to continue that. But again, it's not, there's no predictions here. It's going to be, trading the market, in front of us. So here's where you can sign up to be a member. We go over every morning. I sent out earlier my thoughts on, we discussed Tesla. I thought Tesla might be ripe for a move today. I didn't actually trade a big thing of Tesla today. I had my hands full with some other trades, but we went over the setup and we talked about that. And I actually have a trade structured for the move at this point, right? So we could start with that stock because I thought it was interesting today. Finally participated. My comments this morning were that it's the way that Tesla has been moving. It's not active every day. And you could see for the last week or so, right? It's just basically gone sideways. Nothing wrong with it, nothing selling. Just you've had to be patient, right? If you're a big, Tesla fan. The other thing that I noticed too is we're basically back to that bottom of value. Now, again, this isn't okay, we closed inside the value area. That doesn't mean oh, I want to go all in because we crossed a level that I've been watching for this year, 205.30. It just means, hey, I really want to be paying attention here because we're at this resistance. If they have bad delivery numbers, they're probably going to get rejected here. But if they have good numbers, maybe that'll be a catalyst for them to really start to kind of make a move into the value area for this year. So I did put on an option trade for that because there's some binary risk with that this weekend, and you could see that there's overhead supply on the daily chart. But I think it makes sense to kind of put a event-driven trade on, and then if they manage to kind of gain from there, then then I can kind of play that more in stock, which is obviously what I've been doing more than anything else. All right, so that's one of the things that we do. We do our pre-market session where I kind of go over the macro views as well as I go over some of the trading opportunities. I also do midday videos where I review open positions. So if you're a part-time trader, that might help. The videos that I try to do are no longer than, they're usually around 10 minutes, but sometimes I go a couple minutes longer depending on the day. So I just wanted to kind of bring that in front of you. That's what we do. And I would say, give it a try. If you haven't tried the service before, I'm happy to give you 50% off the first month, right? There's no coupon code or anything. Just send me an email once you sign up and I'll reimburse you the 50%. Let's get into, so of course, really, really strong end of the month. I mean, what can you say about these moves? We could talk a little bit about where these indices finished. But S&P, it's crazy because, first of all, the movement back and forth around the 200-day moving average, just was very, very whippy. This straightened itself out at the end of the month. And we actually finished at the high point for the month. I mean, pretty crazy when you look at what we went through this month with really back and forth price action, right? We got rejected early in the month at the bottom of value, and we made it through there on, decent size volume. So does this, what is the conclusion here? Conclusion is right now we have a strong market and with breadth, which is confirming what the move is. It doesn't mean that we can't, take a step back. And when you, of course, look at the weekly chart, there's nothing really that's changed, right? A couple of weeks ago when we moved to the downside, like, hey, we're still in a sideways range. Maybe we do, for the S&P, maybe we do resolve higher eventually. Right now that's the way that we're leaning, but I wouldn't be surprised if we kind of come back to the middle a little bit too. The Qs, right? So I'll explain this really quickly because I thought that this was interesting, right? Is I continue to always hear people in the media talk about, oh my God, it's just it's just the big tech companies, right? They're the ones, right? That's the argument that we've heard the last couple of weeks. They're the only ones who are participating, right? And then they look at the performance and they say, okay, in the Qs or in the S&P, these 4 or 5 names account for this much performance of the index. Well, that's because of the weighting scheme. So I put out an example about this earlier, and I hope it makes some sense and I hope it helps. That's why I put these things out here. But I talked about this, meaning that it's just how an index is weighted, right? If there's a name that's going to be 20% of the index, of course that performance is going to drive the overall index, right? So I put out an example here, which I hope illustrates the point a little bit. But Apple right now is 12% of the Qs. So if that goes up 1%, that is going to provide 10 basis points of the performance. So if you have another name that's a smaller name in the index. Again, this is just how the indexes are weighted, right? So a smaller name, whatever it is, XYZ stock, right? That's only 2%, right? In order for that to make the same impact in the Qs, it has to move up by 6%. Right. So that doesn't mean that that when you look at the performance and you say, okay, Apple is driving the performance of the index. Well, what's the weight of Apple in the index? Right. It doesn't mean that that's the only stock or the FANG stocks are the only ones that are participating in the Qs. It just means that they're the biggest names in the Qs. So what helps to kind of get your mind around that a little bit is to look at what the equally weighted Qs are doing, right? So every name of the 100 names that are in the Qs are equally weighted. They're not biased. They're not market cap weighted. And look at what this is doing, right? So I would say that this is very good participation, right? You have this act moving above its value area for the year. So you got a really important level to watch here, 99.67. This is where we got rejected back in the beginning of the year, towards the end of January and beginning of February. But this is really strong performance, in this basket of securities. You've got a lot of you've got a lot of participation going on. So don't let anybody tell you that, because I've heard it in the financial media. Oh, it's only these 4 stocks that are driving the performance in the Qs. Well, that's because of the weighting in the Qs. It has nothing to do with other names not participating. A name that's 1% in the Qs cannot make up the performance of something that's 10%. The math just doesn't work that way. All right. So if you look at the equally weighted and then look at the performance there, right, we have some really nice performance there. I brought up the S&P futures. You could see the S&P 500 hasn't been as strong when you equally weight them as the Qs equally weighted, right? And that's part because there has been some underperformance by things like the banks and so on and so forth. All right. So that's where this is at. And again, it did find support, right? And if you want to look at the IWM, of course, too, right? I talked about this coming into this week, right? That we did have, and a lot of people, not just me, were pointing this out, but you had a divergence, right? You had a bullish divergence in the RSI, where last week, when the small caps made a new low, the RSI did not, right? So that's what's known as a bullish RSI divergence. So, impressive, because this got rejected yesterday, right at the 20-day moving average. So finally, first time that we're back above the 20-day moving average, since the beginning of March, right? So, that whole move back, is this a chart that I want to buy here? I don't know. I think it's a little bit too sideways for me, but rallied where it needed to. What about the mid caps? No one ever looks at the mid caps, so I'll look at the mid caps. The mid caps also found that support where it needed to, right? And that's also was right at the bottom of the yearly value area. So that's it. I'll spend another couple minutes. We'll talk about this week's performance. I thought it was very interesting that actually value outperformed growth this week, up 3.6% versus 3.5. Now, both of them, that's stellar performance for the week. But again, it just shows that there was good participation this week. And of course, everybody looking at this, right? Not everybody, but a lot of people are looking at this nicey bullish crossover. This has not been updated for today, but crossover with the 10-day moving average as your signal, basically, giving you a sense that there's a change in tone in participation in the market. So I don't really want to get into the reasons of the why. Why is this happening? Well, I mean, clearly there was, some things that had to happen at the end of the, I don't know why institutions wanted to buy at the end of the month or, for the end of the quarter. But again, it wasn't just the window dressing, because if you go back to the performance for the week, right? You had value go up the same amount as growth. So did they window dress on everything? So just good participation, and we'll have to see if that carries into the new month. Now, April is a good seasonal month, and I would have to say, like, after this, after the move that we saw the end of the today, one of the things that also you tend to get more comfortable if you've been trading for a while is having the market pull back from time to time. Newer traders, they only want the market to go up, right? Specifically, traders that are trading on the long side, they only want the market to go up. Well, we know, like, if you've been trading for a while, that that's not sustainable, right? The market ebbs and it flows, and you figure out a lot of things when the market dips, right? First of all, you find some good trading setups, especially in uptrends when price kind of pulls back to its 20-day moving average. There were a ton of, good, growth names as well as other names that pulled back to their 20-day moving average, and bounced really nicely. And some of them took time, right? This AOXN you had to be patient. That was something that, again, you have to get accustomed to doing, but this took a little while. It was kind of boring here the last 2 weeks, but out to new highs, right? Palo Alto, right? A little bit, not even a pullback to the 20-day moving average, right? But that's what little dips in the market provide to you, right? They provide good trading setup. So my point is, I don't have a crystal ball. I don't know what's going to happen next week, but a little bit of backing and filling after a really strong couple of weeks would not be a bad thing. So I'll leave it there, guys. Again, I thought that was interesting. Gold for the week, as much as I hear how great gold is still consolidating the gains around here. Again, it's not bad because it's not really giving back this, but it's holding in there. But as I thought, once we took this out, that we might see some digestion. Same thing with Bitcoin. Right? Amazing how similar the price action has been over the last couple of weeks, right? This is also taken out this VPOC, right? I'll show you one other thing, and I don't want to scare anybody, but it's probably better that you have this information, is that NASDAQ futures also took out, right? Qs took out that VPOC yesterday, or excuse me, earlier today. So we did rally up to this, right? So that's a big level for NASDAQ futures to get up to, right? Those virgin point of controls, we don't know what's going to happen, right? I just showed you what happened with gold once you took one of those out. I showed you what happened with Bitcoin, right? So it could be that we digest some of these gains. If we have really strong volume, you could get over this, but it's usually an area of consolidation. Now, there's a chance that we could also fade there too. Right? Look at what the S&P did when we took out this last one, right? We hung around here and then we faded and went lower. So again, you're going to have to be, in my opinion, disciplined, pay attention to signals, pay attention to what you're seeing outside of the indices, but what you're seeing in single stocks, right? And, we'll look to kind of put the odds in our favor. Guys, have a great weekend. And again, check us out on TribecaTradeGroup.com. You could be a member and as said, if you have not been a member before, you can get half off your first month to try it out. Have a great weekend, everybody.